Have you ever got charged with a swap fee while trading Forex, or got happy to receive a swap fee added to your account? Well, the swap fee is charged or paid when you keep your trade running overnight. In this video, I will explain to you what is swap. Let us start with an example. Whenever we borrow money from someone, we have to give them interest on it. And when we loan some amount to someone, we have to charge interest on the loan amount. Now, consider you have a friend named John and you borrowed $1,000 from your friend John at an interest rate of 5%. Then, what you did is you deposited that amount into your bank, where the bank is going to give you 4% interest on that $1,000. So in this case, you will have to pay 1% to your friend as the difference between the interest rates of both parties. Now, suppose John gave you $1,000 loan at an interest of 4% and you deposited that money into your bank account and the bank is giving you an interest of 5%. So in this scenario, you will receive 5% interest from the bank, out of which you will give 4% to John and you will be left with 1%. The swap works in the same way. In the Forex market, the swap is the difference between the interest rates of two currencies involved in a currency pair. Whenever you hold a trade overnight, your broker charges you with a fee or pays you interest for that trade. If the broker will charge you with a fee or pay you the interest depends upon certain factors, like the currency pair you are dealing with, your account's currency, interest rates between two currencies, the direction of your trade, whether you are buying or selling, the number of units you buy or sell, and the markup fee of your broker. Now let us try to understand how does swap work. Every currency in the world has its own interest rates. These interest rates are managed by the central bank of the respective country to which the currency belongs and is used to manage the economy of the country. Like you must have seen, there are different interest rate news going on in the Forex market. These are the interest rates that are decided by the central bank of each country depending upon the economic situation of the country. So whenever you hold a currency, you get interest on it. Now, when you buy or sell anything in the Forex market, two currencies are involved in it. And these currencies have their own interest rates. Let's consider the interest rates on the euro is 4%. And the interest rate on USD is 2%. Let us assume that you opened a buy trade with a lot size of 1.0 on Euro USD. This means that you bought around 100,000 units of Euro in exchange for USD. So, you bought a currency whose interest rate is high and sold the currency whose interest rate is low. So, according to rules, you can hold a currency for a day without any interest charge. But as the new trading day starts, you will be charged with or paid the difference in the interest rates of two currencies you are involved with. So in the above example, you will be paid with the interest by the broker, and this is called swap. Always remember, when the interest rate of country whose currency you are buying is more than the interest rate of the country whose currency you are selling, the money will be added to your account. And if the interest rate is higher in the country whose currency you are selling, the money will be deducted from your account.